Every ICT trader knows the theory: manipulation against the open, distribution away from it, delivery in time. But here's the problem. Most traders are applying that theory subjectively. They're eyeballing wicks, they're guessing when a session is probably done manipulating, they're trading a narrative built on vibes and not data. We want to end that today. In this video, I'm breaking down one of our statistical mapping tools, the OHLC Stat Map, and answering the exact questions our community keeps sending in. What problems do they solve? How do you actually trade with them? What setups are the highest probability? And the mistakes that you'll see when you get chopped up if you ignore them. If you trade ICT concepts and you're tired of guessing where manipulation ends and distribution begins, stay locked in, because in this video that turns that guesswork into a repeatable process. Quick housekeeping before we dive in. If you're new here, we build data-driven ICT tools on TradingView, and everything I'm showing you today is available at 2degrees.trade. If you want, just drop some questions in the comments, because all of our community feedback helps shape the content we look to create. Let's start with the foundational piece, the OHLC Stat Map. Let's start with the basics. What problem does this indicator solve that others don't? Here's the core issue with candle theory the way most people learn it. You're taught that a candle manipulates against the open and then distributes away from it. But nobody quantifies how far that manipulation typically travels or when the distribution tends to complete. It's all interpretation. OHLC Stat Map solves that by going back through historical OHLC data for whatever time frame or session you select, in this case the daily, and calculating the average manipulation and distribution levels, or zones, for both bullish and bearish delivery. It plots these as actual price levels or zones on your chart. And it doesn't stop at price. It also maps the average time those phases complete, so you're aligning time and price together. That's exactly what ICT's Power of 3 is built on. Most tools just give you price. This gives you price and time through these vertical lines. And they're backed by math instead of arbitrary guesses. What type of trader is best suited for this tool? This tool is built for traders already operating inside of an ICT framework. People who understand accumulation, manipulation, distribution conceptually, but want to remove the subjectivity from applying it. It's not a beginner buy here, sell here tool, and none of our 2 degrees tools do that. We build frameworks for traders who want data-driven candle delivery through projections layered on top of a narrative that they're already building. If you're a discretionary ICT trader, intraday, swing, doesn't matter, and you're tired of it just being, oh, it looks like manipulation's done, being your entire thesis, this is for you. Let's take a look at a couple of examples. So I'm going to show you a bearish case scenario here. And the key things that we're looking at is, again, we're looking at a daily stat map. We have our time delineations here. Those are the average time for manipulation, average time for distribution, right? And these are our bearish manipulation. This is our bullish manipulation. This is a bullish distribution. And this is a bearish distribution, right? So for this, we're going to be looking at a daily bearish profile, right? And what that means is that I'm anticipating some sort of price action that's going to trade towards the bearish manipulation and produce an entry function at or around these levels to then look to eventually target the bearish distribution. And I want to align time and price together, right? So look, what we have here is price taking out, look, resting buy side liquidity from the previous day into an imbalance. Really, really nice delivery. Okay. After price trades into this imbalance, what do we have? We have price disrespecting bullish imbalances. So I'm going to make this red and I'm going to keep this blue. So you can see that we're trading into a bearish imbalance, trading away from it, right? And you're going to say, oh, why not this? Look at this. Is there any bullish imbalances here that get disrespected, right? It does, but that's already at the open. So really what we're going to do is basically watch that next day, right? Do we have any type of protraction? We start running out buy side liquidity on the previous day. We disrespect a bullish imbalance. They start closing through there. Then what do you have? You have a change of state delivery here. At this point, if you see this move, there's already quite a move past this, right? So you want to see some sort of retracement. Watch for price to return back into a premium, right? That happens here. And do we start breaking any type of price action here? Anything above this? No, we don't. We have liquidity that gets taken here. Change of state delivery, same type of idea. And now look, we flip the open with a created displacement. Okay. So this is a beautiful framework right here where we trade into the previous day imbalance, we rate out pending buy side liquidity, we have a change of state of delivery, we retrace lower high into premium. Price also disrespects another bullish imbalance here, right? So we can just make this blue so you can see that. So we disrespect a bullish imbalance, create a new bearish imbalance, and price just goes off to the races here. So what you want to be looking at here is, again, right here. This is the manipulation, right? And this is the time marker. So it's basically saying that on average, the manipulation for the daily range, on this case, ES, we're going to see that that's going to be completed right around 2200, right? And 2200 is basically going to look, okay, well, did we create any type of protraction? We did. Do we have a change state delivery? We did. Is this enough to take an entry off of? In my opinion, no. You want to see a retracement back into the range, right? We retrace back into the range. What happens here? We have a bearish change state delivery. And look, right here, new 4-hour candle, right? 6 o'clock, change state delivery. And then at this point, right at 8 o'clock, you already have pretty much the whole entire premise for the daily range established. So what is New York going to do? It's going to distribute lower. Okay, in this example, I'm going to talk about how you can use the distributions to actually find meaningful reversals or retracements if you want to be a contrarian trader relative to the daily range. Okay, so in this case, we have the same thing lined up. We have our bearish manipulation here and bearish distribution here, right? So anticipating that our bearish distribution is going to be completed at or around this time, and our manipulation to be completed at or around this time. So in this case, let's take a look at this. We just have a straight move up, right? That's going to be key. There's very little price action below that daily open, right? So when I see situations like this, where there's very little price action below the daily open, I'm immediately looking to say, okay, well, are we going to want to set a more meaningful wick on the day, or is this just going to be a full trend day, okay? And if it's going to be a full trend day, really what you're going to see is just pure sponsorships of one directional price action. What that means is you're going to have very shallow raids on liquidity, and price is just going to immediately start to reverse, and bullish imbalances are going to look to be remained open, okay? So look, we have a high here in the marketplace, we have a high here in the marketplace, okay? After we have a high here being created, what am I going to see? I'm going to see if order flow actually still holding, right? So again, for a trending profile, you want to see, okay, if order flow is still holding, I want to see down close candles on a bullish profile. Down close candles are going to be supporting price, right? So you can see here is that after we rate out liquidity, where's the nearest form of order flow? I don't really like this candle here. This candle makes more sense. We rate out liquidity here. See what I'm saying? Let me come back above. There's a small imbalance here that if I zoom in, you'll be able to see it as well. So you couple an imbalance, then order block that responds. Rate out liquidity again over here, come back above, respond to this again, moves up higher, never closes through this bullish order block, moves up higher again, rates out liquidity, okay? After we rate out liquidity, what happens? We have a bullish imbalance that gets disrespected here. That's the first sign where I'm just going to be like, okay, well, if we started to press up higher from the daily open with a very little protraction or meaningful wick, right, on the daily candle, this could be a sign of a retracement. So if I start to look at this, right, I have my low, I have my high. We're still in a premium here relative to this daily range. So I just saw a bearish imbalance get created and a bullish imbalance get disrespected, similar to what you saw in the first example. After price does that, you can see here is that if we take our candle right here that grades this high, change state delivery, let's make that red. We retrace back into a premium, as we talked about in the previous examples. This is the retracement into premium. And we have another subsequent change state delivery. After that, we have bearish imbalances. And then look, all of a sudden, every single down close candle that we have here, they start getting paired up. This is part of market maker models. If you want to learn more information about that, there's a 4-part series that's on the 2 Degrees channel about market maker models. But I digress. You basically are looking at now if, okay, our bearish candles are going to start holding price lower after they start closing through. And that is really what you get right here. This is just painting outside the lines. This is just a short-term rate on liquidity right at 930 as expected. So 930 for an aggressive profile starts distributing and it starts to target the daily low. So I'm going to clean up these drawings a little bit and you guys have a little bit more of the narrative that you can see here. Whoops. I'm going to add back the tool. So look, bullish imbalance gets disrespected, bearish imbalance gets created. We're now trading below this bearish manipulation with a meaningful imbalance that's here. We have a meaningful imbalance that's here. The bodies are respecting that beautifully at the 50%. We start flipping the daily open. So at this point, again, because we have all this pressing up into premium, rating out a high here, all this is now just going to be low resistance to me because they want to set more price action below the daily candle open to actually have a meaningful wick. So what you see here is now price just basically have an aggressive sell-off. And where is it going to look to target? All of the resting liquidity that was built up in the previous daily range, right? So we do that, and we rate out all this liquidity here. And what you're going to see here is that we basically have a perfect delivery here to that daily distribution. Now, the moment I see this happen with a lot of liquidity that's been taken, I'm going to drop down to a lower time frame. So let's just look at a 5-minute and show you what that looks like. We'll let the indicator load. So right here for bearish, so basically for distribution profiles, and I want to see a reversal or a retracement away, I want to see, is there a meaningful like range in which we're actually going to be looking at. So to me, again, swing high that took out liquidity running all the way down lower here, right? 50% would be a minimum target for a retracement program. So when you're looking down here, if you're just looking to assume new bearish positions here, you're basically chasing price at a statistical area where you're already anticipating the daily range to be capped. So I don't really want to sell short here, 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 here. That doesn't make sense to me because, again, that would just me be looking at chasing price when we've already pretty much fulfilled our objectives, right? And if the distribution for the day is going to be here, right? That's where it's going to be looking to cap on average. That means that I don't really have that much time as well. Like this is basically 2 hours. So instead of that, I just basically flip it on its head and be like, okay, well, if I don't really want to buy, if I don't really want to sell down here, and I know that this is going to be basically where we start capping the daily range, show me and prove to me that price action is going to actually want to make a meaningful turn there, right? So what I want to do is just watch for any order flow shift. So what I mean by that is we're going to walk through on a 1-minute time frame, right? I'm going to watch all these up close candles like this. Up close candle, 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 up close candle. And you see that once we start getting towards these levels, see how up close candles are now about to start breaking? This is like just an early sign of just watching, very mechanically, just watching how order flow is shifting, right? So look, bearish order block 1, bearish order block 2, bearish order block 3. And you can classify this as an order block and classify this as order flow, whatever you want to call it. I'm watching to say, okay, well, 3 order blocks right here that just failed, like I'm going to start looking for a retracement, right? Because if this is now not going to just start to make a move lower, you don't just fight it, just actually get on side. So a couple people would be able to look at, okay, well, this is an inversion. Bearish imbalances getting closed above. Look at the bodies here. Look how they respect 50% here. And then just watch opposing order flow. So now look, bullish order blocks here, bullish order blocks here, right? And you can see here again, previous bearish order blocks here, they're just getting disrespected, right? So if you now look at this, we just retrace back into, look, 50% here of this range and 50% here. So this is now just a fractal discounted area. And you can look at, see, like that's a beautiful entry right there. And say that you're not confident in taking that. There's new imbalances that are created here. Do we overshoot this? Yes. But do I want to be selling at a premium? I'm sorry, do I want to be selling at a discount of this specific range? I don't. So this is a little bit more complex. I think that looking at a bearish profile and a bullish profile in a traditional sense makes a little bit more sense to some people. But if you are a contrarian trader and you want to be looking at trading basically reversals from extremes, these are some of the ways that I personally look at them. So if you look at this, again, this is a perfect delivery of the stat map, being that it just drives down into the distribution. It runs out liquidity here. And at this point, when I see very nice deliveries like that, you could already say, okay, well, there's a inversion that gets created here. There's a newly created imbalance here. You don't have to drop down to the 1 minute if you're not comfortable with that. But there's plenty of opportunities to know that this price point is going to offer a retracement or a reversal program that once you start breaking down and, you know, basically reaching 50%, they trade down to a fractal discount, which happens here. This right here is a beautiful opportunity. And what does that happen right at 11 o'clock? So that's basically EU close. And you have a little bit more of a retracement higher. So this is just what a distribution reversal retracement will look like. So we walked through 3 different profiles. We walked through a traditional bearish profile, traditional bullish profile, and this is also what a distribution reversal retracement profile looks like. So after walking through a couple of examples, I'm just now going to answer some more questions that were basically from the community. And I have one here. It's basically saying, how should traders use it for entry, stop losses, and profit targets? So we kind of walked through that in a little bit of the examples that I talked about, but looking at a chain of state delivery, an IFEG, an order block, a fair value gap, any type of entry mechanism that you're comfortable with, are opportunities in which you can use the stat map. So that's a quick little question that I like to toss in there. I want to be able to talk about a couple of rules for like new users. So like rule 1, like just please keep this in mind, is that this tool augments your narrative. It doesn't replace it. So the tool tells you where and when manipulation distributions statistically tend to occur. It doesn't tell you a direction. You still need your own bias. And it's not a prediction, it's a confluence that will help you determine your trade locations. The second rule is basically saying that you should definitely respect the calculation method that you choose. For me personally, if I go into the tool settings, you see calculation method here. I like using both. You can use mean, you can use median, but you have to be aware that, you know, again, price levels, if you're not necessarily comfortable with looking at a specific level in price and you rather have a point of interest or a zone, then both is going to be a little bit better. So I personally use both. Third rule is I want you guys to be able to actually backtest this on your own. So you see there's historical sessions here. Toss this on to like 40. Go back and just look at price action, right? And see how price has reacted to specific profiles onto the day. And yes, it could look busy, but you can just still walk one by one and you'll start to look in certain things, right? So like here, we don't even hit any manipulation. It's just basically a standstill day. Here, what do we have? Basically price reaching into the manipulation area, but does it hit it? No, it doesn't hit it. So like it's not going to always be a situation where you're going to be like, okay, well, it's hitting these levels and I'm expecting a magic reaction, right? Still requires a lot of narrative. And that's what this tool helps you out with, right? So I can just go through a couple of examples and you can see, okay, well, this is a really nice day. Like reaches into manipulation, takes out the previous daily high. We have an inversion here, flipping the open, bearish imbalance gets created here. Like these are really, really nice examples. It's not always going to look really, really obvious, right? So like, look here, there's consolidated day, but we break through the bearish manipulation, the bullish imbalance. Do we overshoot that? We do, but is order flow still holding? It is. So these are still scalping opportunities. Same thing here. Meaningful imbalance created through the bearish manipulation, still running higher. And this is just Euro USD. I can pull up any ticker. Stat map works on pretty much every single pair. But yeah, this is one of these distribution reversal days. So you could say here again, is there meaningful price action, you know, above the daily open? There's really not whatsoever. Price heads all the way down. Talked about this. Bearish order blocks. But you look at a lower time frame, bullish inversion after distribution. This is a retracement back to the 50% of the range, right? And that's what you get here. So these different profiles, you'll be able to look at them and backtest them on your own. So, you know, this is just looking at the last, you know, week or so on Euro, and I'm sure I can pull up a lot more other tickers and you can be able to see their reactions. But please, please, please go through historical backtests and look how price trades at these levels, past the levels, and when there's actually no reaction at those levels at all, and see if those are days that you really want to be trading. One thing I want to talk about real quick is the liquidity. So you can see I have visual elements set to both. So what that's going to do is showcase the liquidity levels that are in close proximity to the stat map levels. If you only want to see the stat map levels, then these liquidity pools will go away, right? You'll only see your stat map levels. But I personally like looking at both. I want to couple liquidity with statistics, right? So one thing I'll talk about here is this threshold. So if I just show this area for visual purposes, you'll be able to see this. And let me set this to 0 so that there's no confusion. So this threshold, right? Take a look at this area. This double shaded area, that's basically where it's going to be searching for the liquidity, right? So now if I increase this, let me just increase this to like 50. You're going to see that the threshold is going to start to increase, and then I'll be able to see more liquidity pools here, right? So this is just for you to just pay attention to say, okay, well, like how much further away from my stat map levels do I want to see liquidity? But keeping it like 20 to 50 is pretty conducive for most analysis purposes. So you can see here again, if you increase the threshold, you're going to have liquidity that's further away from the manipulation and also a little bit closer before them. So you can see that happen here, and a little bit further away here. So there's a question here that also says, are certain sessions where the indicator performs better? So this is where I'm just going to let you guys know, like it's very important that you understand when there's volatility in certain markets, right? So there's something called the statistical volatility, right? And I'm just going to get rid of the ES comparison here. And I will turn off a couple of features here so that we're just looking at this correctly. So I just pulled up an asset class that most people probably don't trade, but I just want you guys to be aware that this works on any asset, right? So the statistical volatility, which is what is being shown here, it comes with the OHLC stat map, right? And you want to be watching when there's certain times of the session, right, that are going to showcase to you that there's going to be more volatility. So in this case, we're looking at the bond market. The bond market is going to have majority of its volatility from basically 8 to 11, right? And the very, very quiet periods, you can see that these are shaded in yellow. And as it gets closer to red in the shading, right, that's when you're going to expect a little bit more volatility. So take today, for instance, again, you can see that 8 o'clock starts to spur some more volatility. And that is basically now showcasing to you here is that this is a distribution reversal profile. Very shallow. Price action below the daily open, reaches into the daily distribution, takes out relative equal highs. If I go down to, let's call it a 5-minute time frame, I want to see bullish order blocks fail, right? They fail, and then this is just mitigating. And this could be a little bit sloppier to someone. They would say like, oh, this doesn't look that nice or that clean. It's the bond market, so naturally you're not going to necessarily see the same type of velocity movement and candles that you're going to see on NASDAQ and such, but just as an illustrated purpose, the profiles still hold up. And I wanted to showcase to you guys that even if you don't trade certain assets, like let's look at gold. Gold's going to be more volatile in the Asian session. And you're going to see that here. Like, look. So if I go to a 15-minute time frame, so you can see, look, volatility in the Asian session right around 9 o'clock. And also same thing here, 9:30 to 10:30, it's going to be volatility. And then we also have volatility at 2 a.m. mark. So it's a cool tool to basically showcase to you guys that, you know, you can study other markets and know when there's volatility in place. And when there's more volatility, there's typically more volume. And there's more volume, that's when I look to trust price action a little bit more. One of the last things I want to be able to showcase to you guys is the alerts section. So basically, if you want to set alerts on the stat map, just toggle the alerts, like, and toggle the time frame that you want to set your alerts on. So in this case, let's look at a daily stat map. But if I also wanted to look at the 4-hour, I can just toggle on the 4-hour here. And then the moment that I have those stat maps enabled, I'm gonna wait for the indicator to load, and I can just go over here and add alert, and then it'll just add alert. And if you want the actual alert the second that price trades to that, you want to be able to set this to the 1 minute. That way that the moment that price actually trades into these manipulation distribution levels, you'll get the alert. So you can just hit create. And once you hit create, it'll showcase to you that in your indicator alerts panel, it'll showcase an active alert. So we're going to be closing out the video here. There's still a little bit more questions that I'm going to look to make like a part 2 of this video, but I don't want this video to get too long. But I do appreciate everybody that has contributed to me basically creating these videos, which means that, if you had a question and you were, there to vocalize it and want to be able to have a response, I appreciate you because you guys inspire these videos. And I will definitely catch you guys all in another one, but stay tuned for more of these videos. And if you have other questions about other indicators, how I use them, or anything about that, we'll be creating more of these. So definitely subscribe to the channel. I'll catch you guys all in the next one. Take it easy, everyone. Bye-bye.